In August 2019, WeWork published one document. 6 weeks later, $40 billion of its value was gone. All the document did was tell the truth. How did a desk rental company ever reach that number? It starts with Adam Neumann. Adam Neumann landed in New York in 2002 with a suitcase, a thick accent, and a story about changing the world. He tried a baby clothing brand called Egg Baby. It flopped. Then came Crawlers, a line of padded pants for toddlers, and a women's shoe venture that barely got off the ground. Each time, Neumann reframed failure as momentum. He did not quit. He got louder. By 2010, Neumann teamed up with Miguel McKelvey, an architect with his own taste for the unconventional. Together, they launched WeWork in a Soho building, subleasing desks to freelancers and startups. But Neumann was not selling office space. He was selling a movement. Investors and early employees remember his pitch less for the numbers and more for the feeling, like a sermon about the future. He promised that WeWork would elevate the world's consciousness, a phrase that sounded less like real estate and more like prophecy. Neumann became the company's main product. He worked the stage like a rock star, mixing Silicon Valley buzzwords with spiritual slogans. The mission was always bigger than square footage or balance sheets. And here is the detail that should have been a red flag from day one. The business was ordinary, but the story was hypnotic. Investors did not just buy shares, they bought Adam's vision. WeWork's business was simple on paper. The company signed 10-year leases on massive floors in Manhattan, then chopped them up and rented desks to startups and freelancers by the month. It was a classic cash flow mismatch, long-term commitments and short-term income. But Adam Neumann refused to call it real estate. He called it a movement. The pitch was that WeWork was a technology company, a platform powered by proprietary software, data analytics, and a community that would change how people lived and worked. The word community showed up in every deck, every press release. The spaces themselves did not change much, just open-plan offices, coffee, and glass walls. But the language made it sound like something out of Silicon Valley. And here is the detail that should have been a red flag from day one. The product was desks, but the story was transformation. Investors bought the narrative, not the business model. Masayoshi's son arrived at WeWork's Soho loft in late 2016. He did not see a real estate startup. He saw a founder who reminded him of himself, restless, grand, undaunted by numbers. The tour lasted less than an hour. Son told Adam Neumann to go 10 times bigger. He did not want caution. He wanted audacity. Be crazier, Son urged. Neumann listened. Within months, SoftBank wrote the first of many checks. $4.4 billion in 2017. Billions more followed. By January 2019, SoftBank's total stake topped $10 billion. Each round pushed the valuation higher, until WeWork hit $47 billion, a number that for a brief moment eclipsed the market cap of some of America's oldest companies. Capital became the story. The money itself looked like proof that the vision was working. And here is the detail that should have been a red flag from day one. SoftBank's fire hose did not just fund growth, it rewarded spectacle. The faster Neumann spent, the more Son applauded. The psychology of the bet was simple. If you are going to change the world, why bother with breaks? And here's the detail that should have been a red flag from day one. Adam Neumann was leasing buildings he personally owned back to WeWork. Each contract sent millions in rent to his own accounts, rubber stamped by a board that rarely pushed back. The S-1 filing revealed a web of related party deals, leases, allowances, even executive residences, approved without independent review. Then came a $5.9 million trademark payment. In January 2019, WeWork paid that sum to We Holdings LLC, an entity Neumann controlled, just to use the word we. The backlash was immediate. By September, after public outrage, Neumann returned $5.9 million in stock to the company, but only after the damage was done. The story did not stop there. Neumann traveled by private jet, sometimes with tequila and a surfboard in tow. The company paid for the jet, and it paid for his lavish lifestyle. All of it happened while oversight stayed weak, and the company's exposure ballooned. These were not hidden secrets. They were documented, signed, and filed. The real surprise was that no one with a checkbook seemed to mind. August 2019, WeWork's S1 hits the SEC. 180 pages of numbers, risk factors, and a single brutal truth. The company lost $1.9 billion in 2018. Revenue? $1.8 billion. The math is not subtle. For every dollar coming in, more than a dollar bled out. Lease obligations towered at $47 billion. The story of a tech revolution vanished in the glare of public accounting. Investors who once cheered saw the gap, and panic moved faster than hope. Within 6 weeks, more than 80% of WeWork's value disappeared. The $47 billion unicorn became a punchline. By September, the IPO was dead. And here is the detail that should have been a red flag from day one. The only thing growing faster than losses was the legend. The market, at last, stopped believing. Adam Neumann was forced out in September 2019. The board handed him an exit package worth up to $1.7 billion in cash, stock, and loans, and it was later trimmed after public outrage. WeWork limped to the public markets in October 2021, merging with a SPAC at a $9 billion valuation. The stock tanked. By November 2023, WeWork filed for Chapter 11 bankruptcy. The empire of glass walls and kombucha taps was worth less than a single Manhattan lease. And here is the detail that should have been a red flag from day one. In 2022, Andreessen Horowitz gave Neumann $350 million to launch Flow, a new real estate startup, at a valuation over $1 billion before it even opened its doors. Collapse did not erase the rewards. The system kept writing checks. Adam Neumann left with hundreds of millions. Masayoshi's son lost billions. And here's the detail that should have been a red flag. A $47 billion valuation built on desks, spin, and unchecked charisma. Still tempted?